Hi, Tim. Thank you very much for that. Let's go to the next slide, please. So yes, as Tim said, look, we operate in a multi-billion-dollar industry, around about 50 billion US dollars. We're fundamentally a technology company that has built technology and a business model to disrupt that industry. So next slide, please. We've got the taking a bit of time. There we go. So I'll start off with just saying, what is it that we do? So we built some technology that enables humans and machines together to basically improve the productivity of translators and the translation process. And the outcome of that is that we drive higher margins. We've built up now to around about 240 staff around the world in 8 countries. We've got a very significant enterprise customer base. 10% of our revenue is SaaS-based revenue, and we've given guidance this year of $50 million in revenue, up from 32 last year. So quite significant growth that we're forecast and achieving at the moment. So next slide, please. So a little bit about the industry. So if you look at this slide, as I said, it's a $50-odd billion industry. Now, if you compare that to the music industry, it's 3 times the size of the music industry. It's 4 times the size of the cloud computing industry, and 2/3 the size of the global fitness industry. And it's a hugely fragmented industry with 20,000 smaller cottage industry type players, and the top 3 only make up 4%, and the top 100 only 18%. So it's really ripe for disruption. And our big focus has been on using our technology to be able to get to these customers that are now looking to change the way in which they do localization, and all of the ways that they facilitate global trade. And that's certainly something we're achieving at the moment. So next slide. So as I said, we have technology, and I don't want to show you lots of shiny buttons when I can show you the outcome of that technology. And that is fundamentally that we make significantly higher margins than the industry average. Industry average is about 40%. We're making 57%. And the other part of our technology was that this year we were chosen as a primary global supplier for IBM off the back of our technology. And that's a really significant deal that I'm going to talk about shortly. But that was because we can achieve things with our technology that others cannot. And we're now starting to see that get leveraged into a range of other larger enterprise customers. So next slide, please. So here's our growth trajectory. So we IPO'd in 2018, revenues around about 25 million. We had a couple of steady growth years, but our idea was always, with the funds that we raised at the IPO, for that we raised about 25 million, was for that to get us to 50 million in revenue. And that would give us the size and the scale from which we can then start to really approach and try and drive up towards an aspirational target of 100 million in revenue. And you can see a couple of years of steady growth and then 1 year of big growth. And that big year of growth is driven off 50% of it through acquisition and 50% of it organically. So, if you look at this chart and the revenue numbers I'm talking about, I know that when you look at our revenue multiple to market cap compared to many other technology companies, it's fair to say that we are certainly, at the lower end of those multiples, despite the fact that we, have such a great growth rate off the back of our technology. So next slide, please. So to talk about IBM, so we closed a 4-year deal. They went from 20 suppliers down to 1, which is us. They were a customer of ours for Spanish. They used to spend about $1 million a year with us in Spanish. The new deal gives us 55 languages, and about 10 to 12 of them are the same type of volume as Spanish. So quite a significant deal. And the really big takeaway from this was that this was the first time that a really significant global user of translation services had decided to choose a disruptive player over one of the really large legacy incumbents. Okay, so it was a really good sign of, one, what our technology can do, and two, how buyers in the industry are thinking about their vendors going forward. So, great proof around our technology. Next slide. The other thing that we did in the year was we acquired a company in January called Lingotech, had around about 11 million of revenue, 5 million of that was SaaS. They've brought on board about 20 new enterprise customers, and we very much have a land and expand type philosophy. So our idea is that these guys had a good technology base, which had hooked in a number of customers. They're in the US, around about 50 staff, an area that we wanted to grow in. And now we're able to get into some of their really significant customers and start to grow the translation services base, because these guys actually just had the SaaS platform in there. And our platform is very, very good at giving productivity gains. And they had basically a range of connectors which help connect internal content systems into translation management systems such as our Ray platform. Next slide, please. So, as I just talked about, one of our big aims is to increase the customer wallet, one of our big organic growth opportunities. And you can see it right across a range of sectors. We have really some significant customers. And as I said before, we've gone from $1 million one language with IBM to 55 languages. But we also have really significant customers right across the group, but we don't do all of the work for them. And we're now starting to get into a situation where they are looking to consolidate vendors, and we see some really significant growth opportunities. So you can just see from the amount of logos we have on there and the quality of them that we are in a very strong position for that organic growth. Next slide, please. So over the last few years, we have made a number of acquisitions. And again, this is part of the land and expand. It's not a consolidation. It's not just about saying we're going to buy a company and just grow for the sake of growing. It's about saying we're going to buy a company, as we did with MSS in Spain, that have IBM as a customer. We're going to again get into IBM, show them how we can grow and move forward. And you can see as we've acquired companies, even up to Lingotech, they have Nike and Oracle, for example, as customers. So next slide, please. So just on the last couple of slides, this is about our aspirational target. And what we're showing here is that if you look at the analyst forecast, we're around about break even this year. For a tech company, I think that's unusual, as most are generally making really significant losses. So we're around about break even with sort of 60% growth. If you look at that going forward, as we grow now, we don't expect our OPEX to significantly increase. We expect our margins to stay the same. And we raised $24 million 2 months ago to help fund the next level of growth to get us to 75 million. And that'll be a mixture of organic and acquisitive growth. And you can start to see the white bit there, which is EBITDA, started to get produced. So we're right at that pivot point where we really start to create significant value for our shareholders as we start to grow, but also deliver some EBITDA. Now, there was not a timeline on this. These are not financial years, these are milestones. So we're not saying that there's a timeline to get here. We've raised the capital, we've got all the right building blocks, and this is where we go. And again, if you can see at 100 million, OPEX again doesn't increase that much, margin stays the same, and we start to get some really significant EBITDA. So next slide, please. And so just a final slide, summary. Look, we have growth on par with the leading sort of tech unicorns in the ASX, and a big chunk of difference between where a lot of those are trading and where we trade, and I think that presents an opportunity for shareholders. Industry-leading margins, proving our technology. Massive win with IBM, which isn't just about tech, but it's about our ability to sell and get into these large enterprises with our enterprise sales teams. We're investing quite heavily at the moment in growing more of those types of salespeople. We've got some very active M&A on the go at the moment. So again, we've raised the capital, have a strong balance sheet to execute, and we're at an inflection point where OPEX is going to stay steady-ish in terms of growth rate, and we can see some some really good opportunities for growing the value for our shareholder base. So yeah, thank you, Tim.
Thanks, Grant. That's really interesting. I mean, I'm totally surprised at the size of the industry. I mean, it makes sense. Can you talk through your kind of average customer and what they actually use you for in terms of translation?
Yeah, look, there's all sorts. So there's a company called Stretch Creative, which is a US company, for example. They use us they do content creation into multiple languages for large sort of Fortune 500 type companies, and they use us to streamline that process. Japanese company called Midatoyo sell micrometers and engineering equipment into Europe. So they sell into 20 countries, and they put out their latest specials and offers every month on the website and on brochures. And so they use us to do that into 20 languages. So that soon adds up to be quite significant. And then you have all of the legal firms, all of that type of work that goes on. Manufacturing is a big sector for us. A lot of manufacturers, obviously product manuals, automobile manufacturers, for example. So a really diverse customer base. We are strong in a couple of verticals, but yeah, it's just an enormous industry, ripe for the picking.
Yeah, fascinating. And your growth through acquisition, when you look for an acquisition, is that to have complementary tech, or is that to buy a client base?
That's to actually buy. It's not so much to buy a client base. It's actually to buy the customer, and then so to buy the business, improve the margins, use our tech, so we can move them from 40 to 57%, say, gross margin, or get an uplift. So you make them more profitable. And then you get into that customer base and you want to grow them. So Lingotech was a bit more tech, but also customer. But really, we're looking for, legacy players who don't have the tech, don't have that ability, but have these strong relationships.
And can you talk about how competitive it is in this industry at the moment, whether it's kind of small tech startups or the likes of Facebook? How competitive is it? And is there the risk one of these big guys kind of invests heavily and gobbles you up or gobbles the industry up?
Oh, look, the big guys don't have really much interest in doing the type of stuff that we're doing. I mean, that's been an argument, I think, or a conversation going around for about 10 years. They've never done it because they don't want to be involved in the services industry. They want to be involved in consumer-facing, low-touch type stuff, right? So your mass, Google Translate, give you the context type of stuff. Yes, they don't want to get involved in managing complex projects around healthcare or medical devices, right? It's a whole different game. In terms of the tech startups, again, you can't win you're not going to win on a small scale. I mean, if I look at IBM, it takes massive production teams. There's still lots of integration. It's not something a small startup can come up with some little widget and think they're going to win. You've got to really be a significant services organization, and that's where we've focused differently to others. We've built the tech team, which is about 50, but we've also built a global services to give a channel for our innovation.
And is there any human intervention in terms of the translation process?
Yes, there is, absolutely. So it's machine, and then it's humans. I'm just saw the question there about liquidity. What are the plans to improve liquidity? Well, we're coming on the Share Cafe for a start. No, one of the reasons is I don't think we're perceived as a technology company enough, and so we're doing lots of. We did a tech webinar last week actually, which showcased our tech and how our clients use it. So I think as the market starts to understand more of our technology, they'll start to really understand, and see the value. I think that's one of the reasons, and that's, yeah.
And I mean, lower volume is always associated with a register that's well held by founders and institutions. Can you talk us through the register?
Sure, yeah. So again, if you want to follow some really strong leaders on this, so you've got Oz Ethical just become a substantial shareholder. Climb have become a substantial shareholder in the last sort of 6 months as we've done a capital raise and other stuff. Then you've got Bailador, ex-All Black captain David Kirk's fund. They're a substantial shareholder. My family's substantial shareholder. So yeah, it is tightly held, and I think everything we can do. I think as we start to people start to see us win. I mean, I'm just a great believer you deliver the results. We sat there for a long time saying, look, we're going to win a really significant deal off the back of our tech, and the market wasn't sure. When we delivered IBM, they suddenly went, actually, these guys were telling the truth. They are doing it. And when we say we've now got the 75 million and 100 million target, I think people can start to see that we have a clear pathway to get there.